The weather in San Diego is heating up, and so is the housing market. Hey everyone, it's Deva and Eric, and we're back with another monthly market update. Today we're checking out the current trends and unpacking what they mean for you, whether you're a buyer or a seller or just curious about the market in San Diego. So hit the subscribe button and let's get started.
All right, let's take a look at the monthly chart and then we will zoom out and look at the long-term trends. Okay, this is the San Diego County month-to-month overview here. And looking at March to April, we have 11.4% more new listings than we did in March.
Spring surge.
Spring surge.
Such as it is.
Yep. Minus 4.1% on the pendings. So that's, interesting. I think rates were up for a couple of weeks
Yes, they were.
Of this. So that definitely softens the pendings up a bit. Closed sales up 3.7%. That's a reflection of the previous month's pendings. And then days on market down 6.9%, almost 7%. So really that translates into 2 days on average. And then most interestingly, 3.9% up in median price, a pretty decent jump in the overall median price here in San Diego County.
We were flat the period before that too,
yeah.
So this was a bit of a surprise for me to see that jump.
Yeah, I was expecting it to be at least flat or maybe slightly increasing or slightly decreasing, but 4% is a pretty decent jump.
All right, well, let's check out some long charts.
Okay, looking at the longer term charts here, new listings over the last 3 years. Looking at 22 to 23, we were way down, and now we're coming back up again, which is good. We need more new listings to both help buyers find properties and also maybe to calm down this crazy, price surging that happens. It's a balance. You don't want sellers to lose equity, but you also want buyers to be able to buy. So, a few more new listings would be good. And then looking at this month, this is the highest number of new listings in a month for the past year. And it's up nearly 20% from the previous year. So such as it is, we are having a 2024 inventory surge. Then when you look at this longer chart here going all the way back to 2012, you look at 2013, 14, 15 on out, you see this peak in inventory, or new listings, I should say, in the mid to high 3,500s, all the way across until you get here to 2020 when, things started to get weird, and still in 2021 and 22, we started seeing cracks even in that. And then it just crashed into 23.
That was a weird time.
It definitely was. And it remains so. There's just not that much, inventory out there. And, we'll get to the reasons why in a minute. But how about we...
Let's talk about closed sales.
Yeah, let's talk about that. Closed sales, similarly with new listings, because these things kind of go hand in hand. 1,980 in 2022 for April, and then down 37%, from 22 to 23. And now we're coming back up. We're up almost 6% from last April, so that's good. And I mean, I keep highlighting the detached numbers. The attached numbers reflect similarly. And then year to date, again, is very similar. And looking at, let's look at detached. We'll just continue with this me favoring detached homes trend here. Going back a year, we had, 1,400, 1,300, 13, and then we started seeing some weirdness in closed sales, September, October, November, January, December, and then January of this year was the lowest number of closed sales recorded ever in terms of how long San Diego County's been recording sales data on the current platform, which is the MLS.
Well, you like detached homes. I like condos. It's different that there's kind of a different pattern there.
Well, that is interesting, isn't it? And that is one thing I was noticing towards the end of last year and the beginning of this year, is that I was seeing more condos being sold than I previously had. And that you have January, February, look at the bounce in condo sales from the year-over-year change. Almost 14%, 19%. These are, people who are probably, my theory on this is these are move-up buyers who just finally decided it's time to go. Interest rates be damned. Let's just do it. We're tired of being crammed in this 2-bedroom condo, and prices are not getting any better on detached homes, and the price is strong on the condo. So let's make the move and play the interest rate game. So that is interesting. You're right. Very interesting. And similarly with this long chart, everything is very nice and regular until you get out of 2021 into 22, and then down the chute everything goes.
Well, how about median price? Let's check that out.
Median price, as we said, is up. Ooh. And it's up 15.8%.
That's a pretty big jump
from last year. It's a huge jump. When you look at 21 to 22, 19.2%. That was bigger. And then down 5%, 22 to 23 for April, and then back up again. And of course, 2022 was the year that we had 15% jump in the first 90 days and then a 15% drop in the subsequent 90 days. It was like a real yo-yo effect.
Roller coaster.
And the net effect was down 5%. So it sort of evened out, but not quite. And now, rebounding firmly here at 15.8%. And looking at attached, you have a similar trend. And unlike the other historical charts where you see, that regular heartbeat and then everything goes down in 2021 and 22 and 23, here we just have a nice steady climb uphill. But look, it was very nice and even. We had some nice even appreciation going on from 2012, dips here and there, obviously. But, here in 2020, it went up and then up sharply in 21, even more sharply in 22. And, then we have this much larger dip due to the huge jump in interest rates in mid-22. And then everybody just said, screw it, we're buying anyway, and push the prices right back up to where we are now at a median detached price apparently of $1.1 million.
That's a lot of dollars.
And $685,000 on a condo. That's, the strongest median we've ever seen, that we've ever reported. So that's news, I guess.
Well, let's look at the reason why a lot of things are going sideways and getting weird, and that is interest rates.
All right, let's check it out.
So here's this week's Freddie Mac chart, U.S. weekly averages. Down a little bit from last week, still up there, but a little bit of improvement.
Still up there, however, the first decline we've seen in the past 4 or 5 weeks. So it's, taking some of the pressure off, which is good. Although at the same time, one of the things it's probably doing is giving buyers a little more room to bid up a price, but not that much. We're talking like tenth of a point or something from, it's not a huge drop from last week. But if you go all the way back here in October of last year, we were flirting with 8% there for a while. So to get it down near 7 and hopefully under 7 soon will stimulate some more activity in the market. It'll take some of the pressure off of buyers, and it'll probably shake a few sellers loose, maybe a few of those move-up condo sellers that are waiting for rates to get back under 7 again. It's not great. However, it's almost nowhere to go but down right now, I think.
Well, it seems like the Fed is, likely going to be lowering rates at some point this year, although maybe not as soon as everyone had thought or hoped.
Yeah,
but,
that keeps getting pushed out.
Yeah, so we'll keep waiting on that. But,
but for now, at least we have some slightly better news this week than we did last week.
Well, we'll continue to keep an eye on things for you. And
of course.
Do you have anything else to say?
No, I think that's pretty much the update for now.
Okay, well, thanks for watching. If you enjoyed this video, please like, share, subscribe, and we'll see you next time.
See you, folks.